Hi everybody, it's Scott Fuller here with another edition of the East Bay Real Estate Market Minute, the fastest 60 seconds in real estate. Today we're going to be talking about, is there a bust coming in the real estate market in the East Bay? A lot of people are starting to talk about it. You're probably starting to see it in the papers. We'll talk a little bit about what we think is going to happen over the next year in East Bay real estate. As always, if you're interested in finding out more information on our website about what your property might be worth, we've got a link for that. We've also got links for looking for homes to be able to purchase in the East Bay. And as always, if there's something that's not on there that you are looking for, please reach out and let us know. We're happy to help you, whether you're looking to sell a property or whether you're looking to purchase a property. Okay, we've had a lot of chatter about what's going on in the real estate market. Is there going to be a bubble coming up next year, in the next couple years, something like that? Prices have gone up a lot. So obviously people are a little bit concerned with prices having gone up 20-25% in a lot of markets, and we're also at peak of market of where we've been in a lot of cities in the East Bay. Is there a reason for concern? If we look back to what prompted the bubble from late 2000s, was we had a lot of loans basically where people could sign and didn't have any equity in the property. That was the biggest issue, is 0% down loans, 3% down loans. Those types of loans, if anybody got into trouble and wanted to be able to walk away, they could, because they basically had no investment in the property at all. So it was easy for them to pick up and to leave. Those loans, in my opinion, were a reason why we got into the problems that we had gotten into. Fast forward to 2013, when we start looking at prices, how they had gone up quite a bit, 2013 to 2015. The first start of that, we saw a lot of investors come into the East Bay and put cash into us. We have a lot of investors who have gained a lot of equity over the last year or two, put cash into the property. So obviously those are very low risk type of properties as far as going into some sort of a default status. Since then, we've had a lot of people who are mostly putting down 20%. So the more people put down, not only the more equity they have in it, the more protection against going into default, but there's also less likelihood they're going to walk away because they have a true and real investment inside of the property. Now, even if we were to see, and some people say, well, we've got the VA loans, which are 0% down, we've got the 3.5% down FHA loans. That's true. However, that is under the 700, generally the 700,000 price point. So if people have very little equity, is it easier for them to walk away if they needed to, if there was some sort of a hardship? Sure, it's easier for them to walk away, but the difference is that those people are not in a position to where there's going, if they were to walk away from the property, we still have loads and loads of buyers who are interested and lined up ready to buy in that price point. Now, if we look at the converse situation and we said, well, what if there was, people who defaulted at properties over $2 million or $3 million? Well, that doesn't really impact anybody else. That just impacts the seller, the person who would own the property, as well as the bank who financed the property. So in my opinion, we're not going to see any sort of bubble right now. We are going to see slowed growth, in my opinion, but there is so much demand in the East Bay for housing that for people that are kind of sitting on the fence and saying, I think there's going to be a bubble, prices are going to go down, my personal opinion, I don't see it happening, because again, there's so much demand coming in. Even if interest rates were to go up 1/8%, 1/4% over the next 12 months, which is probably a little bit aggressive in my opinion that they would actually do more than 1/4%, but even if they did, that does have an impact on purchasing power, but it doesn't have that much impact on what's going to happen in our local market. So if you are a buyer looking to purchase in the East Bay, don't wait for the prices to drop, because chances are you're going to get priced out of the market. And as we've seen, some people wait. The year ago they had an opportunity to purchase. They decided to kind of wait to see what was going to happen. They got priced out of the market. So you could find out that if you're holding out on this in 2 to 3 years, prices didn't drop, you're now renting. Rents are certainly going up by quite a bit, so that could put you in an awkward position when you're looking to actually try to invest and get into a property if you're a buyer in the East Bay. As always, if you have any questions, feel free to reach out to us, talk to us. We're here to help you out with all of your real estate needs. Appreciate you watching. Have a great day. Bye-bye.